In CarMax most recent quarter, the company found used car prices rose on an annual basis for the first time in more than 2 years. The news comes as 25% tariffs are in effect on all U.S. auto imports and additional tariffs on parts. They pose a threat to vehicles made in the U.S. So where does that leave the used car market? That's the big question. Here with more, we've got David Undercoffler, editor-in-chief of Autolist, a car guru's company. Now, let's start simple, David. How have tariffs affected the car market so far?
Well, on the used side, it's actually a little early to tell. We're seeing some sort of a little bit of growth in used car prices the first quarter, but that really was not related to tariffs. So it's sort of a wait and see approach to see the impact. We are sort of forecasting at this point that there certainly will be an impact. Right now, it's between 10 and 15% in terms of prices on the used car market. But I think we're a few months away before we start seeing those impacts directly. And then on the new car side of things, you're definitely starting to see some tension there. We're still at a period where many of the vehicles, or nearly all the vehicles sitting on a dealer lot right now today, were vehicles that were brought into the country prior to tariffs. So again, it's still early, but I think you're seeing consumers certainly are starting to react and sort of head to the dealership, sort of sensing that there may be changes ahead of us.
You know, what is kind of the supply and demand equation looking like currently for used cars in your view?
Yeah, so it's sort of an interesting point right now because we are seeing late model used cars, right? Sort of the new used cars. There are actually fewer of those. And that's because we're still seeing kind of the residual impacts of the chip shortage from a few years ago, right? So at that time, there were fewer new cars coming into the market, and those would now be coming off leases. They're entering the used car market. So there are fewer of those. But net overall, there are more used cars. So there's more quantity, but what we're seeing is that there's also less quality, right? So what your dollars may have gotten you, what $25,000 may have gotten you 2 years ago, you now are getting more miles in the car and an older car for the same money today. So that's sort of a result of inflation, interest rates, and sort of the used market itself. So it sort of depends on what type of used car you're looking for.
So as you were mentioning, it means that your dollar goes less far, perhaps, here.
Yeah.
So what are we seeing in terms of the propensity to spend and what consumers are willing to pay for, and where they're saying, you know what, maybe I'll just wait for as long as I can at this point?
Yeah, so we at Autolist, we've been surveying our car shoppers since the beginning of January about tariffs and sort of how that's affecting their decisions. And we're seeing a lot of people sort of saying, you know what, there's a lot of uncertainty right now. I'm going to sit on the sidelines and sort of wait and see. So there's almost double the number of people who are waiting and seeing versus the number of people who are actually saying, you know what, I'm going to go out and get a car right now because of the uncertainty. So we would say, or my perspective would be, look, it's sort of dance with the devil right now. If there's a particular vehicle you want and you're going to need a vehicle, a new or used, in the near future, it's probably better to act now because I can't imagine a scenario in which prices for new or used decline. So yeah, that's sort of the advice we're giving people at the moment.
How is demand for electric vehicles and hybrids compared to gas-powered or internal combustion engine cars?
Yeah, great question. So for pure electric vehicles, it's a really interesting time. Sales of new electric vehicles were up in the first quarter of this year. And part of that really had nothing to do with tariffs, but it was sort of related to the Trump administration. Many people are anticipating that Trump will change the federal incentives that were brought into place under the Inflation Reduction Act during Biden's administration. So consumers, Ford and General Motors had really good Q1s in terms of their electric vehicle sales. So I would imagine that that's going to continue into Q2. On the used side, I mean, it's a great time to get a used electric vehicle. You can get some really killer deals. Sort of the incentive pricing is sort of built into the lower pricing now. So, a lot of people, if you're looking for a third car, maybe you've got a teenager in the house or just like a commuter car, right, to use during the week. I mean, $5,000, $10,000 can actually get you a pretty, accommodating all-electric car. It's pretty interesting.
All these things considered, I was taking a look at a survey that was published this morning from Allison Worldwide and a poll, and they had essentially come to some of the findings here that overall the consumer sentiment and pricing expectations, they ultimately kind of painted a worsening picture for both foreign and U.S. automakers. I wonder what the manufacturing picture looks like. over this uncertain period and how that will eventually impact prices more long-term, even in the used car market, if some of these vehicles that are being produced now over this next 18-month stretch, say, are going to be more expensive, and how that factors into the pricing once they hit the used lots later on.
Yeah, I mean, the ripple effects from sort of everything we're experiencing right now and will likely experience in the next several months as a result of tariffs. I mean, these are ripple effects we're going to feel in the car industry for years. I mean, earlier I was just talking about still today we're seeing the impact of the chip shortage from several years ago affecting pricing and supply and demand on the used side of the market. So I think, yeah, this is something we're going to feel for a long time. And also it's worth making the point that not only are cars themselves facing tariffs right now, but so are car parts, right? So if you are a used car dealer, you're looking to recondition the car and turn around and sell it, your price is going up, so the consumer's price is also going to go up. So it's sort of at every stage, regardless of sort of whether you're new or used or what segment you're in, we're going to be affected by this, and for potentially years. And again, that's sort of separate from what else Trump does and chooses to do with regards to tariffs. Sort of the situation right now has already created this effect.
David, just lastly while we have you, is there a best positioned used car dealer right now among the CarMaxes, the Carvanas of the world who go out and purchase vehicles, put their money forward in order to know that they can get a margin on the other side of that sale?
Yeah, I mean, again, this is sort of an interesting time, right? Because you're taking a little bit of any company that's sort of acquiring a vehicle is taking a little bit of a gamble, right? You're carrying the interest on that vehicle while you own it before you can turn around and sell it. And as I was mentioning, if parts pricing is going up, it creates a little bit of volatility there. So it's riskier, right? Your margins are less sure than maybe they were even 6 months ago, when you could sort of bake in sort of, the pricing expectations and the profit margin expectations were more stable. So yeah, I mean, it's a lot of overhead that companies like that are carrying, and so, like I said, some volatility that I think they're going to have to negotiate, and that's really tricky. I wouldn't envy anyone in that position moving forward. All
right, David, you've retired. You've reminded me that I have to fix the chain on my bike when I get home. I appreciate that.
All right. Thank you, Brad.
Thanks.